Hello everyone, my name is Sunday and you are welcome to Against FX. All right, today's episode, uh, I'm going to be teaching you guys how to identify and trade valid support and resistance level. All right, valid support and resistance level. All right, because all support and resistance that they are not valid, but the ability for you to recognize or rather identify a real valid support and a valid resistance gives you an edge in the market. All right, so it's very, very important for you to be able to identify or rather have the knowledge where support level is and where you have a resistance level. So before we proceed, how is the course going? Please, I need you to respond and drop a message at the comment section. Drop your comment. Let me know how you guys are progressing. Like I promise you guys, every day I'm going to be releasing new videos, specifically for um, people who are ready to venture into financial market as a trader. So if you want to be a trader, please just go to my YouTube channel, Against FX. You subscribe. After your subscription, activate the bell sign. The subscription does not require money, just for you to click the button subscribe. All right. Sometimes it might ask you of your email address. Just fill it. Nobody is using your email address to do anything. It's just a system that is like that. You just want to be sure whether you are a robot or a human being. That is why it will ask you to fill in your email address. So if you see something like that, if you encounter something like that, you don't need to, no worries. All right, no worries. So once you have subscribed and you activate the bell sign, all these things I'm just explaining is just a click, one click. It does not take you, it will take you time. All right. You can do it on your phone, you can do it on your laptop, you can do it on your desktop. All right. Provided you just go to YouTube, provided you have a YouTube downloaded in your phone, on your phone or your system, you just go to YouTube, type Against FX, then subscribe. All right. Then after you have subscribed, you now open my channel. Once you open my YouTube channel, you click on playlist. Once you click on playlist, it will give you, I have three playlists there. All right. But you just as a beginner, all right, or even if you've been trading and you're not profitable, you want to key into this crash course because some people they just catch the groove from the middle and they started trading. But if instead of them to now go back and build their foundation, no time for it. So this is an avenue for you to even learn to brush yourself up. If you have been trading, it doesn't mean, all right, is this an avenue for you to brush yourself up? All right, now you click on the playlist, you see beginners free course. Once you click on beginners free course, you see all the video from day one till today. You will see, and I've promised you guys, I'm going to teach you guys for a whole month for free. 1 month crash course for free. in details without rushing, without speaking plenty grammar, without complicating things. I have promised that I'm going to simplify things for you guys. So today, like I asked you guys, how are we coping with the course so far? Please, I need your comment at the comment section. So let me know if we are taking a step further. All right. So today's topic is how to identify and trade valid support and resistance level. All right. So you must know how to identify and also know how to trade support and resistance level. Now, you might ask, what is a support level? All right? And what is a resistance level? So all these things is what I'm going to teach you guys, and I'm going to show you practical way on the chart, live chart, so that after this video, you know what support is and you know what resistance is all about. And if you've been following my video on this course, by now you already know what I'm about to teach you guys. Now it will just be a revision for you. But if you are joining for the first time, please get a pen and a paper. You must endeavor to jot some things down and watch the video not just once. You can watch it like 2 times, 3 times, 4 times until you are able to grab the full understanding before you now move to the next video. Don't just rush it as if you are watching African magic. No, because anything you learn is what you are going to practicalize. And you should know that this is not just anyhow video. It relates to financial market because what you learn from here is what you are going to practice on your life account. And when we mean life account, we are simply referring to you must invest, you put money there, your hard-earned money, even if it's $50, $100, $500, $1,000, as the case may be, or if you're in Africa, if it is Naira, you can use Naira account. If it is 100,000, 200,000, 50,000, 20,000, it's money. So you need to be able to protect that money. All right? You need to be able to protect that money. We call it capital. So based on what you have learned, is what you will now use to what we now use to practice. Then these are the things you are going to use to execute every of your trade so that you can grow that profit, that capital, and be making profit. So that you won't just go into market and just doing what do you call it? Try your luck. No. In trading, you don't do that and you don't gamble. What you don't know, don't go into it. If you know it, you know it. If you don't know it, you don't know it. That is how it is. So today, we are going to be teaching you guys on how to identify a valid support and resistance level and also on how to trade them. So we'll start with support level, all right? Support. All right. So when we say support, guys, what do we mean by support level? Because if you be following me, you should know what support is all about. Now, I'm not going, like I promised you guys, I'm not going to be complicating issues. I will make it very simple for us to understand. A support level is basically, a support level is what? Is basically where buyers wait for price. It's basically where buyers wait for price. It's just a place where buyers they wait for price. All right. As price comes to that level, they enter the market and push the price to the upside. All right. It's basically where buyers wait for price. Simple as that. That is support level. That place is where buyers wait for price. I don't want to start giving you people unnecessary theory, definition. No, just take support level as a level where buyers wait for price. All right. In a bullish market, in a bullish market, like I told you, I'm going to, anything I do, I show you on the chart. In a bullish market, this is it. You agree with me that this market is bullish. Low, high, low, like this. Then here it started coming down. It gave us a market shift. It came back to this level again, like this. So now let me explain. This point here is a support level. This point here is a support level. This is a support level. All right, you see, it's a support level. This is a support level, and this is a support level. Do you understand? Now, what happens is that buyers, once you are able to identify a support level, once you are able to identify a support level, all you need to do is for you to wait for price to come to that level. Then you now enter the market and start pushing the price to the upside. As simple as that. Now, you not maybe the way I explain it is very simple. That is why you guys are confused. Now, price will create a support anytime you see that there are activities of buying and selling at that point. Every support and resistance level, there are always activities that happens there between sellers and buyers. But at the end of the day, if it is a support level, like what we are treating right now, a support level, it then means that buyers will now have the upper hand to now, from that level, push the price to the upside. After this topic, we are going to now treat demand and supply zone because everything correlate. All right, everything correlate. Like if we say demand zone here, a demand zone is this whole area, this point. Now, let's not go into that, okay, so that you guys will not get confused. You see, in a bullish market, price take off from here, create a low, and now create a high, pull back, create a low, create a high, violating or pushing price above this very one, then come back, create a low, push to the upside, create a high, push to the downside, create a low, take price up again, and create a high. All right. When something like this happens, we say bullish trend. All right. So I'm giving you guys a scenario again so that you understand it better. This one now is a bullish trend. So you now see from here, this very one point here, sorry, this very point here is a support level. All right, it's a support level. Let's now clone it. This is a support level. We clone this one. This is a support level. I'm giving you this diagram as a scenario so that you will understand it better before we now move to the chart side. This is support level, this is support level, this is support level, this is another support level. So if price should now pull back after price created this high, it's supposed to come and create support, right? And we'll say this is a support level. And I tell you guys, the support level is a level where buyers wait for price. That is where they wait for price. As soon as price get to that point, they enter the market and push the price to the upside. Now, the scenario is this. It has created a support and buyers are here. Then the next thing, they enter the market because they know that after this pullback has ended, a retracement, if you hear that I use the word pullback or a retracement, it simply means decrease in price. Sellers pushing price temporarily to the downside. Remember, we are in an uptrend. But there will always be a way, there will always be a time where there will be an increase in price, decrease in price, increase in price, decrease in price, in between the uptrend. The same thing happens if you are in a bearish trend. There will be a decrease in price, increase in price, decrease in price, increase in price. But the idea, or rather the underlying trend, is bullish or bearish. All right. So now buyers will stay here. All right. Now push the price to the upside because they know this pullback or a retracement move is just temporarily. It's just temporary. It's temporary. So once it gets here, buyers will wait for price here. This is support, and let's put it buyers. They'll wait for price here. As soon as price get to this point, they will buy. You see people rushing to buy because most people that are doing other jobs apart from trading, at this point, they would have position waiting for price to get here, even though they know that price is here for now. All right, they will position here, knowing fully well that before price will create another high, is going to experience what we call a pullback. All right, it's going to experience what we call a pullback. Let me put it here. This level here is what we call pullback. All right, it's what we call pullback. All right. Something like this is what we call pullback. Like this push to the downside is pullback. This one is what? Increase in price. You can call it pullback, or you call it a retracement, or you call it a retracement. All right. Here, you see, this is a pullback like that. For the sake of this training, that is why I'm using all these things, okay, so that you understand them very well. This decrease in price to the support level is what we call pullback. Another word is retracement. Retracement, all right? When you hear the word retracement, we hear the word retracement, is the same thing. It is the same thing. All right? It's the same thing. So at this point now, buyers will come here and wait for price. Okay, let's use this one as an example. Buyers will now come, wait here, knowing fully well that this high has been created, price will come back to this point before it push again and create another high. So buyers, what they will do, they will wait here. All right, remember, this is a support level. All right, this is a support level. Can you see it, guys? Now, for you to know that a support level, now you have been able to identify what support level is all about, right? You have been able to identify what support level is all about. Now, it's a level where buyers wait for price, and once price get to that point, or that level, they will now push the price up. All right. Once it gets there, because of plenty buyers that are waiting for buy, just like 1 million people are waiting for price to get here, all right, before they buy an asset. An asset price is here now at $50, let's say $50. They are now saying they don't want to buy here because it's high. The price is high already. They want to patiently wait for price to retrace or pull back, all right, to this level. Instead of $50, they want to buy at $25. So they will patiently wait. That is why in trading, if you want to be profitable, you need to what? Wear a garment of patience. A day will pass, you will not take any trade. 2 days can pass, you will not take any trade. Even 3 days, and sometimes 1 week. But some people are trading, they are trading and they are making money. Yes, but based on your own strategy, we are going to, once we are about rounding up, then we'll now, because strategy is what you will now use to wrap up everything, because that is what you will now be using to trade. We don't need to teach that now. When we're almost wrapping up this course, then I will now teach you guys a particular strategy, how you need to position before you enter trade. All right. So because of your strategy, you just need, okay, price is here now. You have position because you have already identified that this is a bullish trend. Why? Because it's breaking structure to the upside. Remember here, break of structure, break of structure. I don't need to be doing that. If you want to know about all that, how to mark break of structure, there's video there already. So we've passed that level. So you've already identified that this is a bullish trend. Why? Because it's breaking structure to the upside. Okay, price is here now. All right. Oh, okay, let's use this one. Price is here now. Price is here right now. Let's say $100. Let's say $100. And you don't want to, the price here now is $100, right? And you are saying you don't want to buy at this price. You are waiting for price to come back because you know as a trader, there's what we call order flow, meaning that anytime there is increase in price and a structure is breaking, a high is created, or a new price is established, there will be a moment of relief. That is what we call pullback. There will be a moment of relief where price will come back. There will be a decrease in price to a support level. We are not saying price is at $100. You are a trader. You already know what you are doing. You know for sure that this $100 is too high. If you should buy at the rate of $100, how much are you now going to sell the asset? You now say, okay, no. You have to wait until price come back to this level. You want price to come back to um, you want price to come back to $70. Let's just put it at $70. You want price to come back to $70. All right? Because the idea is that once you enter a trade here, it's going to go above $100. All right, it's going to go above $100. So you are now saying you don't want to buy at the rate of, you don't want to buy at $100. You want price to come down to $70. That is where you will now buy. And what happens, you place what we call a pending order. I will still teach you guys types of orders and all that. I will teach you guys, all right? You place a pending order, you put your stop loss, you put your TP, that is your target point, then you just go to work or maybe you are doing any other thing. Anytime price now pull back to this level, your order will be filled, it will be activated, plus the millions, thousands of buyers that are already waiting patiently for price to get to this point. There you will not see a very strong push. It will not go up. Taking this high away, creating a new price. The new price might be, let's put 150 here. All right? You know, see price move from 70 to 150. Previously it was 100. You waited for price to come back to 70 and you entered from here. Price now move to this level. That is how to trade, guys. We buy low to sell high. You see? And if it's a bearish market, you sell high to now buy low. Because if you are buying something, you want to sell it at a higher price. If you sell something at a higher price, you want to buy so that you restock at a lower price. Do you understand? It's as simple as that. Just open your mind so that you understand this scenario. This is just trading. All right? Don't overcomplicate things. If you overcomplicate things, you will suffer it. All right? So by the time you start making loss or losses, you now think, oh, what is wrong? Maybe trading is not for me. No, you are doing the wrong thing. All right? If it's difficult, that means you are doing the wrong thing. The way I explain it, it's as simple as this. And that is why most people are having this analysis paralysis. You'll be confused. You don't need to be confused. It's as simple as the way I explain it. But support level is a level where buyers wait for price. As soon as price come to that level, they enter the market. They push the price because they know once price get to that level, it will push to the upside. It will go and create a new price. All right. It's at $100. It now retrace to $70. This is where buyers wait for price in anticipation that as soon as price gets here, they will not push the price because they know that if the market is going to create a new price. And what is a new price? 150. So you enter here, price will get to that. The worst thing that will happen as soon as there's a reaction here, price will get to this point because remember I told you guys, once you see that a trend creating a double price, or rather equal price, or a double tops. If you remember, if you go through that, if you have been following my video, you understand. Once you create a double tops or equal price, that is another name. If it gives you an equal price, let's say as price is pushing from here, it now stop and gives you $100 again. That means there's every tendency that the sellers that are here, they don't want the price. They don't want a new price. They want from here, the market should start selling. And the next thing you will see is price pushing below this level, violating this support level, giving you a market shift or a change of character. As simple as that. I've already treated this. All right. I've already treated this. You understand this. So that is the worst that can happen. The worst that can happen, guys, is price creating equal price or a double top. Once you see that price creating an equal highs or equal price, $100, and you now push again and get to this level and stop, giving you $100, yes, you have made profit. All you need to do is take your profit, wait for price to now tell you where it wants to go. Because at that point is a sign of reversal. All right? It's a sign of reversal. That is why we always tell people, once you enter from a support level, don't target 150. Always target this level because this is guarantee. You know that price will either get to this point or breaking above it. All right. If you now see, once you get it, you can take partials, allow it to run, the rest to run. So don't worry, once we are teaching, almost rounding up, then we'll brush you guys on how to take profit, take partials, and all that. So it's very clear right now. So from this support level, price will push, create a resistance, come back, create a support. This is where you wait for the price. As it creates a high, let the price come back, creating a support level. You enter from here as a buyer, push the price up. And as it's coming down, once it gives you a sign that it has already created a new high, that's giving us a new price, you come wait for price here. As you come here, it creates a support, then price will push again to the upside. Like that. You wait for price here, you push, you come here, you wait for price will push to the upside, give you a new high, you wait for price here like this. It's as simple as that, guys. It's not that difficult and it's not a rock science. So that is how it is, guys. That is how it is. So basically, support level is where buyers wait for price. And once price get to that level, they will now push the price to the upside. All right. And how to trade support level? that I've told you guys, once you see price push to the upside, creating a high, yeah, that means he has given you price, all right? Just let it pull back. As soon as the pullback has ended, all right, as soon as the pullback has ended, that is a support level. Then all you need to do is enter, push the price to the upside. Once another high is confirmed after the break of structure, once a structure is broken, expect a pullback. One of the signs for you to know that pullback is about to start is once a high is taken. Now there's a pullback and you started pushing the price to the upside. Once this high is violated, any moment there will be a pullback. All right, so it's a sign. Once a high is violated, expect a pullback because price don't just take off from here and start going up. No, even if during news release, price will just shoot because of volume and it will create gap, but before you know it, it will start dropping. So it's like that. So support level is basically where buyers wait for price, all right, so that they will buy at a cheaper price. All right, so you now know, let me show you guys what support level is all about. Like here, I have marked this place as a support level. Now, another thing from the chart, I've already told you guys, this is a support level, this is a support level, and this is a support level. You ask me why did I say that place is a support level? Because price took off from here, create a high, pull back, create a low, push to the upside, create a new price, a new high, pull back, create a new high. You see, this is it. You can now see this is how, this is a support level, this is a support level, this is a support level. Now, price created this as it's pushing to the upside. Now it has created a price, a high price. You wait for it to come down. Wait for price to come down. All right, remember I told you guys, the market is not perfect. It's not like a textbook or a diagram stuff. All right, that is why you have to master your chart. Once you see that there's a pullback simply means, okay, this is a high. And you now see price going opposite direction. All right, it's coming down, gradually coming down. But how will you now know that the pullback has ended? Once you start seeing, like I told you guys, once you start seeing a morning star forming, this is a formation of a morning star. Remember we talked about candlestick? This is it. 1, 2, 3. Before this push, look at it. All right. You see formation of a morning star. The formation of a morning star usually forms at a support level. I told you guys, at a support level, and it must be a bullish market. Then the evening star will form at a resistance level. That means the price is ready to come down to sell. All right. The bearish trend. As simple as that. I don't want to go back again. I've already taught you guys. See, this is a sign for you to know that, okay, this push to the downside has ended. The market is ready to sell. All right, it's ready to buy. All right. So this is what? A support level. This is a support level. All right. It's a support level. Look at it. This is a support level. And there's another support level. And here again, here is another block. All right, this is another block that caused a push to the upside. All right. So when we start, when you get to that level, I will teach you guys what other block is and how you can refine it. All right. So this is support level, this is support level. And another thing, how do you now know a valid support level? How to identify a valid support level so that you can wait there for price to come there so that you buy. Now, you can use what we call a tool called Fibonacci retracement tool. Fibonacci retracement tool. I will make a video on that. I will teach you guys how to use it. Fibonacci retracement tool. You see how I measure this from 100 to 0. All right. Now, from 50 to 100 is what we call discount level. From 50 to 0 is what? Premium level. 50 to 0, that means the price is high. From 50 to 100, that means the price is low. So when you see price going up and he has given you a high, you wait for price to come back anything below 50. Once he push below 50, that means he has tapped into your discount level. What you need to do is watch reaction. Once you see a pin bar, like I told us, a pin bar signifies buying pressure. We already talked about pin bar. It signifies buying pressure. That means buyers are in the market. All right. Now you see this pin bar rejection, price push up to this point, 61.80%. All right, is below 50. So it has already traded into our discount level. You see it? So once you see a pin bar rejection like this, after after this candle closed, and you now see a bullish candle like this, then just be planning for your entry. But make sure the last candle, like 1, 2, this a pin bar, you see another bullish candle, you see, it did not engulf this. You don't need to enter. You wait for another one. It has not engulfed. Then see this one here. It now push to the upside, giving going higher above all this one. So once you see something like this, you enter and you know that okay, the market is ready to buy. A new price is ready to be formed. I now see price pushing to the upside. That is one of the ways you can identify a valid support level by using Fibonacci retracement tool. Fibonacci retracement tool. By using Fibonacci retracement tool. All right, I'm going to teach you how to use Fibonacci retracement tool. You now see this point here, it has created a support here. So you see how I mark this point here, meaning that in future, price will come back to this point. Any support level, all right, where buyers waited for price and push price higher, in future, price will always make reference to that level. You see, when price created this high, it now started coming down. Sellers push the price down up to this level. And the moment the price touched this line, this level of a support, look at what happened. It sold and the price increased again. The price increased again. There was a reaction the price increased again. And it now gave us a new price here. You see, it gave us a new price, or you call it a new high. It gave us a new price here. All right. Now, after this new high, what happened? Price gave us, there's a formation we call, guys, what is it called? This very one here. Let me circle it. Let me know if you guys have been following me. 1, 2, 3. This three formation, what is it called? I want the first person to drop the answer at the comment section. This, I won't say it. This formation here, after giving us this formation, you see price started selling. And when it got here, you see it now gave us that same formation here. All right. You know, when the formation is here at the top, I almost mentioned it. When this kind of formation happens at the top, you know that price is ready to sell. And when it happens at the bottom here, at the support level, all right, this one at the resistance level, the support level is where buyers will wait. Now, this is where this level is a level where buyers were waiting for price. And when price got here, he respected this level. All right? He respected this level and he gave us this formation. And this is another confirmation, all right? Confirmation that the price is ready to buy. All right. So immediately this formation happen at the downside, all you need to do is go in fully. Use a very better lot size to make good money from it. Now, this is another support level. A support level is support level. So that is to identify, this is how you can identify a valid support level. Why? Because price has tested this level and it gave us a bar. In future, price came back to that same level, tested the same level, it gave us a bar. Price came here again to this level, tested the same level, it gave us a bar. All right? So, and you can all see that after this high, price yesterday night, market closed like this. All right. So if market open now, if you know how to read the goes by candlestick anatomy that I taught us. Now you should know with this level, this thing here, price seller has been pushing price to the downside, but you see a wick here. You see a wick here. It means that buyers are still in the market. They are not done yet. Don't be surprised. Once market opens, there will be a push to the upside because this is a break of structure. After a break of structure, what you will expect is a pull, is a retracement. And this is a retracement phase. All right. Once the retracement phase has ended, there will be a push. We are expecting price to give us a new high. So what we don't know yet is that after price has given us a new high, whether price will push above this level, breaking this resistance level, or if price should stop at this same level, it will not give us equal highs or equal price, then what you should be expecting is for price to now start selling. Price will now start selling, coming down to this same level. And if this same level is respected again, we will see a push to the upside. But that does not mean that at the end of the day, price will not break this level. Once price break this level, meaning that buyers that are here, they are not much, okay? Meaning that the sellers, they are now more than the buyer. So once they are able to break through this support level, Then price, they will come back to retest this level, then price will now start selling. That is how to, it's not a rocket science. You just need to know how to read structure. It's just for you to know how to recognize when price is about to buy or when it's about to sell. The science is what I've already given you guys. So you should know all this. As simple as that. The way I'm teaching you guys, I bet you know any other person. All right, I'm not the best, but I am assuring you that if you follow my teachings, my videos, you effortlessly at the comfort of your home, you will learn how to trade and you will be a very good trader. So that being said, we already know what support level is all about, and we already know how to identify a valid support level. And one thing you guys should know, you should take note of is that the higher the time frame, the more stronger the support or resistance level is. All right. If you go too low, maybe 5 minutes, 15 minutes, price might not respect those support level. But on a higher time frame, once we start treating higher time frame or higher time frame correlation, we will understand it better. All right. So the higher you go, the better. All right. The higher you go, the better. It's just like a foundation of a house. All right. If you want to build a story building or two-story building, three-story building, the foundation will be different from when you want to just build ordinary, from when you want to build a burglary or just a bungalow. Excuse me. Um, um, my head is hot, man. When you want to build a bungalow, all right, the foundation will not be as when you want to build two-story building, three-story building, four-story building. So it's the foundation that will determine the height of the building. So in trading, the higher the time frame, the better the level, the stronger the level. All right. So the next thing we are going to talk about now is the resistance. We'll be talking about support, right? We have dealt with that. So we now say, okay, what I've showed you the diagram, and on the chart I've already showed you. All right. Now we are going to talk about uh, resistance. So the resistance. When we say resistance, the same thing. I'm just going to copy this and paste it here and then do edit. It's basically we are sellers. This time not buyers, sellers. Sellers wait for price. This one where buyers wait for price before before they can buy. Let's put it this way. If you look at it, I'm not using textbook definition. Everything I'm bringing it from my head. The way you quickly grab the concept. That is the important thing. All right. That's why when we were in school that time, when they give you, when a lecturer gives you a definition, we tell you use your own. definition. Define something. Use your own understanding to define it. By the time you do that, that is to show you are proving that, okay, you already know, you've grabbed the concept, not quoting directly or replicating what the textbook is saying. No. From your own understanding, give a definition. As simple as that. All right? It's basically where sellers wait for price before they can sell. That is a resistance level. Support level is basically where buyers wait for price before they can buy. When they want to buy an asset, there's a level where they will wait for price to come to, price will come to that level, price will come to that level, they buy. Sellers will wait for price to come to that level, that is the resistance level, before they can sell. Now, this is how it is. This is a high, it creates a low, then create a high, it creates a low, price go back, retracement is a retracement, this retracement will create a resistance, then the push to the downside will now violate the support level, it will give you a new price, pull back, push to the upside, give you a new price, pull back, a new price, pull back, a new price. All right. So this is a high. Let's say this is a high. All right. This is what we call resistance. This is what we call a resistance. This is a resistance, right? This is a resistance. This is a resistance. Remember, we are dealing with sellers now. This is a resistance, a resistance. This is also a resistance. This is also a resistance. All right. And this is what we call bearish trend. All right. This is a bearish trend. And in a bearish trend, you just be looking for what? Selling opportunity. Now, what we are saying is that once there is a pullback, what will cause a break of structure to the downside is what we call a resistance. Now, this push, this retracement or pullback, like I've told you guys, this pullback, this point here, from this point to this point is a pullback, all right? Let's say, for example, $150, then price will now pull from $50, price will now move to $80. All right. Then from $80, it will now move to $95. Now, this resistance here is where sellers wait for price. This is where sellers will wait for price. This is where sellers will wait for price. This point. Sellers will wait for price to come like this. They will enter here to sell, breaking this level. Then the next point is Sellers will come here after breaking this level, their TP is hit, a new price is given, they will come here and wait for price. So you see, anywhere there's a resistance, just know that resistance, they are sellers. It's the sellers that are creating a resistance, a point, a level where they are waiting for price so that they will now sell. They will sell high. Then when price go low, they will now buy. All right? You have an asset. When the price is high, you sell. When you sell, when you now want to restock, when you now want to buy another asset, buy back your asset, you want the price to come down so that you can now buy. And soon as the price is going up again, you sell. Do you understand? That is just it. It's for you to grab the concept, the understanding. It's for you to grab the understanding. As simple as that. Once a new price now push to this point, a new price is given here. All right. What happens in the market is that buyers are here. They will buy from here, push the price like this. As the moment of relief is going up, retracement, once it get to a resistance level, all right, they will sell. Once they sell, as price is coming down, they buy. So a resistance is a level where sellers wait for price so that they can sell the asset. As simple as that, guys. It's as simple as that. And how do you now know a valid support, a valid resistance level? Those are the things. It's the same thing. Flip is the opposite. Now you know that by using Fibonacci retracement tool. All right? You know that by using Fibonacci retracement tool. Fibonacci retracement tool, just like what we did just now. All right? For example, if you want to use what do you call it? Fibonacci retracement to know where to enter, you now start plotting from the highest price to the lowest price here. All right? 100 now will be up, then 0. All right? So anything above 50%, anything above 50% is what? Premium. And anything below 50% from 50 to 0 is a discount level. Remember, for the fact that this is a bearish trend, all right, you want to be buying when you want to sell when an asset has increased in value. So this is what? A premium level. A premium level, you buy at a premium, you sell at a premium level to buy at a discount level. All right? Now, anything from 50% up, and once you see a reaction, all right, look at it. When price retrace from here up to this point, look at this formation, guys. What is it? 1, 2. Then see this massive big candle after this formation. All right. And before that, price got to a pullback, got to this point. It went a little, all right, breaking this structure, giving us market shift. By now, you know what market shift is all about, or change of character. Then price now pull back, creating equal highs. After that, look at this formation here, then pull, it now drop. So it's as simple as that. Those are the signs for you to know that the market is preparing to sell. Once it gives you a change of character, you know that, okay, it's no longer a bullish trend, it's now a bearish trend. All right? So one of the way you can identify a valid resistance level is by using Fibonacci retracement tool. I'm going to teach you guys, but there's no way I can round up this topic without uh, showing you what Fibonacci retracement tool is all about. Okay, all these numbers matters, and I've explained to you, but I'm still going to make video on it from 50 to 100 on a bearish trend is what is a premium level. From 50 to 0, you see 0.00, all right, is what we call discount level. But if it's a bullish market, let's something like this, there's increase in price. How you now going to plot it, you are now going to, the 100 will not be at a support level, the 0 will not be at a resistance level. All right, so all you need to do is wait for price to pull back. Once he entered the discount level, you watch reaction. And once you see price reacting, you enter. As simple as that. All right? As simple as that. And another way to identify a valid support, a valid resistance level, guys, by now you should understand. Now that the price dish out a sell here, all right, if you look at it, price has been selling. After this change of character, it has been going down, all right? And it created a resistance here, this very point. If you drag this thing to the future, all right, anytime price get to this level of price, because if you look at it, this point here has a price, and where are the prices? Look at this side here. These are the prices. So every level there's a price. Anytime price get to this level, look at it, 1.17872. This side, guys, this side. Once price in future, even this anytime, if you like, just keep dragging it like this. Dragging it like this. Anytime price get to this level, there will be a reaction. There will be a reaction. All right? Because why? When price got here, it sold. It now move again. When it got here, it dropped again, sold. So it's coming again. If it gets to this point, it's still going to drop. Otherwise, what will happen is that price will break above it, and once price succeeded in breaking above it, that means the sellers that are here, they are not strong again. So buyers are ready to take price above this level. All right, because all along sellers, they have been dropping the price. Once price get here, massively they will enter and push the price down. But anytime they succeeded in pushing the price above this level, just know that a new price is expected to be created. As simple as that, guys. This is trading. It's not complicated. It's not complicated. So now, all you need to do, when will price get to this point? You don't know. I don't know. That's why you need to wear a garment of patience. If you want to be pursuing price everywhere, you will lose your money. I have a strategy that I'm going to teach you guys. You wait for price. The price, you see, After it drops up to this point, all you need to do that once you see a change of character, all you need to do is look for opportunity to always sell. Now price got here, it dropped, breaking structure. The next thing, you know that price will have to come back. There will be a retracement. After a retrace, then you have to sell. After it must have sold, a new low has been created, there will be a pullback. Then it will sell until you now see a change of character. That is what happened here. We now know that, okay, price is gradually going higher again. Then you now change your bias. You will now be buying. And as soon as you see change of character here again, all you need to do is change your bias and position for sell. That is how it is. It will continue like that forever and ever. So the foundation of trading is for you to know how to read market structure. If you don't know how to read market structure, you will just be jumping from left to right without achieving anything. So guys, this is how far we can go now today on this video so that you guys will not have what we call information overload. This thing I've showed you guys, I've showed you on a diagram, map everything. Then I even come to the chart, show you anytime, any day, this is how it is. If it is on MetaTrader 5, MetaTrader 4, Trading View is the same thing. The only difference is that you might see red and how will I call it? Red and green candlestick. You can modify it to suit your own color. I've told you guys before, all you need to do, right click on the candle, click on settings. All these things you modify. If I click this blue now, all these colors are colors you can use to modify it. The only difference you will see is different candlestick colors. So, and those one does not really mean you can take black, you can take red, you can take blue. It's your choice. But one thing is certain, all right? Once there is a bullish trend, before it turns to become bearish trend, it will not fly. There will be a change of character. Once that change of character happens, once you notice equal price, double tops, or double bottom, all these things, once you notice that, you know that the price is changing from a bullish state to a bearish state. And once it's bearish, once you notice equal low or double bottom, you just know that, okay, once price gives you equal price at the support level, just know that, okay, the next thing you watch out for is change of character or market shift. And once that happens, just change your bias, look for opportunity to buy. How do you look for opportunity? Wait for price to pull back to a support level, then you buy. If it's bearish, wait for price to pull back to a resistance level, you sell. Guys, this is how to trade. You don't need, as far as I'm going, you don't need any other thing. All right? You don't need any other thing. If you can follow this teaching throughout this month, I bet you will know how to trade. All you need to do is any video I release, watch that video like 2 or 3 times. Watch it like 2 or 3 times. Get a note, jot some things down. All right. And if you now want to take a deep dive, go to ChatGPT. The topic that I've treated now, put it on ChatGPT. It will give you anything you need to know. If you have all the time in the world, continue to read. If you ask ChatGPT million questions, provided you know how to channel your question, it will give you exact answer. It will give you answer. Then keep reading, keep downloading. That is how it is. Guys, as far as I'm concerned, we have dealt with this decisively, nothing more, nothing less. How to identify and trade valid support and resistance level, guys. The higher you go on the higher time frame, the stronger the level. All right. So that is why you see some support level do break easily because you are trading on the lower time frame. If you stick to the higher time frame, like 4 hours daily, or at most 1 hour or 2 hours, those levels tend to be very strong. Or another way, professional way you want to do it, mark your support and resistance level at the higher time frame. Then you have marked, let's say for example, let me give you example. Okay, let's say price is here now. I've marked all this one, two, marked 1, 2, 3. Watch it, guys. Let's scale to 1 hour. You see, this is 1 hour. This is 1 hour. This is support. This is support. This is support. Let's now scale to 30 minutes. You see, even if I am trading on 30 minutes, but I am still using that 4-hour structure that I have already marked. I know that this is my resistance, but this is my support level. All right. This is my I know that this is my support level. This one here is my support level. All right. I've marked this one. This is my support level. This one here is also my support level. And this one here is also my support level. My support level, right? So you don't need to mark all this in 1, 2 is okay, all right? Me, I'm just using this one probably because of this teaching. So I've marked my support level from the higher time frame. So I'm no longer, even if I'm now on a lower time frame up to 15 minutes, I am not trading blindly. I am following the higher time frame structure. Did you get the gist now? So that is how it is. But if you just open 15 minutes and start marking the structure, there are so many structures on 15 minutes that will not hold because the higher time frame is what decide where the trend will go. All right. So thank you so much, guys. Because if you look at the higher time frame now, once you mark the structure on that, you can scale down, then it will give you the right direction on where you should trade to. All right? That is how it is, guys. So thank you so much. And don't forget, like my video, share, leave your comment at the comment section. On this note, I say God bless you. I'll see you guys tomorrow on the next episode. Bye for now.